Welcome back to another daily recap for the first day of August, August 1, 2024. It's currently 8:11 a.m. I'm Sam Morton, and I hope you can hear me okay. Apparently there's an issue with the microphone. I did mention the other day I'm kind of on a working vacation, Lake Huron, northern Michigan, and in a little cabin here. So internet's awesome, but the environment's not conducive to making these recordings. So hopefully you won't hear too much background noise. I will say the noisy half of the family has left for the day, for the rest of the week actually. So that should help. But anyway, back to these levels here. So I want to point something out on the monthly chart. I mentioned yesterday that they didn't close the way I would have liked them to on the monthly chart. Well, that's in the SPY chart. If we look at the E-mini chart, the continuous chart of the futures, we might have a little bit more information to go on. But anyway, one other thing, the official close, according to anywhere online you look for the SPY yesterday, was 550.81, I believe. But according to TradeStation, the close was 550.41. See that right there. And that's on the all different time frames that I can pull the chart up. There's a little bit of a discrepancy there. So that throws the numbers off just a little, created a few zones to account for that. And we'll come back to this chart after the market closes, of course, to analyze any trades. One other thing to mention that kind of goes along with the fact that I'm on this kind of vacation here is that this will be a really good time for me to get some more work done to the course and the website. I have been working on it slowly, but to do that, I don't think I'm going to record any trades today. It ties up one screen. I don't have my entire setup where I'm at here. I just have one extra monitor than a laptop computer. So that means I'm tying up the big screen, the big monitor with the trades when I could be moving back and forth, because I do a lot of work and analysis during the day on other screens. So I'm just not going to record today, and whatever happens, if I take creative liberties, trail some positions, or don't take any trades or whatever, you just have to take my word for it after the fact. But per usual, we'll come back and analyze anything playing by the rules and everything I did. But first, let's take a look at the monthly chart. First, the volume histogram down here is a little bit kind of messed up, but doesn't really matter too much because what we're concerned about is just the last few months. You can see the volume was still pretty low for the month of July. These are monthly candles. So here's where it closed. You can see they're showing 550.81 on the monthly. Yeah, close 550.81. But the daily close and everything on my side was 550.41. But anyway, just looking at this monthly chart, I mentioned before about the time it's taken them to get from this low here. This is October of 2022 all the way up to where they're currently at. And this little kind of interim pullback, which was October of 2023. Both of the times, you just count the number of months it took them to get there. I've said this before, but like a good solid signal like a doji candle on a really good volume above the moving average, then you have something to kind of work on. You could basically say that, this could be the signal they're going to kind of pull back, make a little bit of a trend change, and you can trade against the high of this. So, you could buy some puts or something on the SPY. I mean, it's not something I would necessarily do. I've done it before and lost pretty big because it's somewhat of a gamble, but they're due for a pullback, and the timing is a pretty important function of that. Well, this is the SPY. It doesn't paint an exact picture of what I want to look for, but let's look at the E-mini continuous contract. So here we see the volume is above this 90 period moving average. So that volume is a different story. Also, it's just more of a defined doji candle, still well above the moving averages. And time is the same, of course, and they've already started August. This little action here is the month of August already starting because they've had some pre-market action going on. So what's going to happen? Well, I don't know. I mean, to me, it wouldn't be too surprising to have some type of pullback. So I'm pointing to the low here, which is October 31st, 2022, the end of that month of 2022, up to July. Well, they pulled back. It's a timing function. And also from this low here of October of 2023 up to here, which is just a few months back, April, they pull back. That's also a timing function. So we have basically a kind of a double bogey here. Timing here, timing there. Anyway, I mean, you can see it. You can go back on any time frame and start counting the number of periods, months, weeks, days, hours, whatever, and start looking for other reasons of a trend change. And usually it is preceded by some type of signal on a candle, like a big doji candle, tail candle, something like that. The kind of things we go into a lot more detail on in the trading course. But anyway, so what we have on the E-mini chart here, the futures chart, is somewhat indicative of a trend change. Now, they could go up and spike just like they did here. They could spike above this little somewhat of a tail candle here way back in November of 2021. Well, the next month, it looks like they closed slightly above it. Then they fell away. And then, for the better part of the next year, they were in a downtrend. Why? Part of the reason was the timing it took them to get to this place. It's the same exact timing we're here currently. And the fact that they were pretty far extended from this is a 20-period moving average. They probably are going to come back to visit that or even go through that at some point. Where's some targets? Well, we got some interim targets down here. They could go all the way back down to 5,000. I'm getting way ahead of myself here because all I really care about are these daily levels. Just make these intraday trades. If I can squeeze 10, 15, 20 points or more out on a single day with one trade, I'll take it. I'm not looking at taking huge, 2 or 3 or 4 month option trades. I don't do that anymore. I've had better luck with the futures, as you can see, as evidenced by the tracking log that we track every single trade I do here, the good, bad, and the ugly. I'm going to leave on this chart so we can come back to it after the closing bell to examine the price action during the open session and talk about any trades that may have been triggered. We'll catch you on the other side. And we're back. Pretty decent down day, wasn't it? Just this morning, I was talking about possibility of a pretty big pullback, or at least a pullback sooner than later. Looking at the futures chart, the monthly chart of that big, kind of a big doji candle signal they gave us. Well, zoom out here and look at what happened based on our levels today. Right off the bat, I want to know if anyone rode this down or much of it down, because we kind of nailed the top here on this level at 554.69. Just give me a second. I'll adjust the levels because the standalone levels need to be adjusted. The zones I don't adjust, and I'll explain this other lighter blue level here at 544.88 in a minute, but 1 second. So all I really did was bring this level down 5 pennies, 5 cents, and brought 549 up 5 cents toward price as price was coming into it. Because after 9:45, they were right up here. I sold pretty much at the market. Well, I'll show you the trade. I did take some screenshots instead of recording, so it gave me some latitude to use this main monitor for some work. I was kind of back and forth, but anyway, wrote this down and got a few points out of it. I ignored this level, just wasn't feeling it at the time, and I have proof of that. I will show you what would have happened if you traded every single one of these levels, because as you know, I have the playing by the rules, the PBR, if you will, log, and then I have the personal trades log. This next level here worked, and then this level here would have produced a fumble. And there's a level down here that wasn't on the board this morning, but it was a legitimate level right out of the calculator. I just honestly did not think they would get this low. So I had this zone as kind of my last line in the sand, but this level would have worked. But of course we can't count it because it was not provided. And it was like 11:30. I just stopped. I had a pretty decent run with just a few trades and called it a day at around 11:30, and really did not look at the chart until much later, and kind of surprised how low they went. But let's talk about what you would have done playing by the rules. This will be explained when we look at the tracking log, of course, but since I have the notes in front of me here, so this was an obvious base hit here at this level, 554.64 as adjusted, easy 4 points or more if you could get them. And both of these levels here, if you were trading each level by themselves, you would have had what I would call a wash because of a near miss. So you would have entered the trade as they came into it. They bounced up and they came up really close. They came up within 10 cents or so of your profit objective and then fell away within a minute or two. So basically giving the trade without giving the trade. So that's kind of a near miss of the profit. Like they don't hit the profit objective like they should. Same thing happened on both of them. Now, you could have traded the middle of this only, and that would have given you a base hit. We're just going to assume, like I've done for every single other input into the tracking log, is you treat each level independently, playing by the rules. I know these are zones, and I like to trade the middle of them, but just to keep things objective here, if you traded each of these levels, the same scenario for each case, you would have had a wash for each of these. You would have entered the trade, it would have come up, barely come short of your profit objective of 4 points, come back to your entry level, and you would have jumped out. Now, not saying that would have been easy to do. I wasn't feeling it for other reasons that I was looking on my charts. I just really wanted to be on the short side, and I'd already been stopped out on this run down here. So I did not take this trade. I did take the trade. I had a level here. I'll talk about it in a minute. Essentially, I was kind of curious if we were going to bounce off of the close from yesterday, I think 550.41 or so. And they did. I got a little base hit there, just one contract. This was a legitimate level from the morning. They bounced there, so that's a base hit. This would have got you in trouble because you would have bought at each of these levels and not enough to give you a base hit. And really, it wasn't close enough. I mean, you could have waited this one out, playing by the rules. I like to see 10 cents or less, and then that's kind of like that's the trade. If they don't do it and they pull away really fast, then I am going to second guess the trade most often, or most likely. In this case, you would have had a fumble of, 7 points, and then a base on the reversal as they kept falling. This was not there this morning, so we can't count that. And then there was no other levels that I had. Wasn't interested in making any more trades, so I didn't calculate or identify any more levels. So that was it for playing by the rules. And let's take a look at what I did. Once again, these are screenshots. You can see the time. It's 9:43 in the morning before I start taking trades. So they hit this level right about 9:45, and I had an order in the system. So, all right, I'm already short in the system. These are just screenshots every few minutes or so. Maybe I'll just pause this so you can see what I did here. So you saw me what I did. I sold 2. I took 1 off at $300. That was 6 points or so instead of the usual 4, thinking I can trail the other down farther. It was only a 7-point trailer, not really enough because they had a lot of volatility. And they didn't get down here to this point, which I would have jumped out before this zone for a nice clean $1,000. But instead, they stopped me out when they pulled me down. There we go, like 237.50, something like that. So that was those 2 trades satisfied, or 2 contracts traded. And like I said, it did not mess with this level at all. I'm taking some pictures just to show you that I didn't want to trade it. So here is the close, or the gap left over from yesterday. This was the close, and I just put a quick trade here, 1 contract, bought it, and got 1 quick base hit, $400 or $200. That's 4 points. And the same thing down at 549, but this time I went for a few more than, I think that's 5 points on 1 contract. They bounced there as well, and at this point I wasn't interested. So one thing I did, so I wasn't trading. I didn't say, you can see I did not trade this, but I did just put levels here. This is my profit objective, the green line, and the red level is the fumble threshold, and those are based off the middle point. If you, assuming you would have bought both of these, I just want to see, I'm just kind of curious, would this have bounced or not? And it didn't. We've already talked about that. That was too close, and you could have jumped out, but if we're counting this as a fumble, then I've got what the math looks like. It just started over. So anyway, that's what I did. And now on to the tracking log. This first one, playing by the rules. I just put the notes here. If you want to see, you can start here at level 6 and work your way down. And those are the notes, and these are the points. So you would have ended above water. Not, it's respectable, nothing to be ashamed about. Above average, actually, if you were playing by the rules. And then my trades were slightly different. It was actually 19 points and some change total points, but since it was a mixture of 2 contracts and then most of it, then a couple 1 contract trades for a little bit less than half, it works out to be about 11 points or so, because what I had was a nice clean $1,000. So it was in between here. So these are the effective points, if that makes any sense. And once again, I am curious if anyone sold at the top and rode this thing down, because it kind of became clear that it was a good day to be short. Kind of wish I had done more, but I was happy to get $1,000 within a couple, or really within the first hour or so, and then just get busy with other things and not really even look at the market for the rest of the day. And the other question I have is, if there's anything you guys are interested in looking at, I have the ability to do a lot more metrics. I don't want it to be too confusing here, but I'm talking about this tracking log here. I can show a lot more output. Like I'm going to probably figure out a way just to show the number of days here, just because there's 250 trading days in a year typically, right? When you take out weekends and holidays. And so what does it come out to be really each year? And it's somewhere in the neighborhood of 180. This means 180 days levels are hit and trades are taken. I can show this easier with this type of data in a pivot table. So I can just isolate, say, what happened in 2023, for example. And I mean, the numbers aren't going to change. You're going to have the totals and you're going to have the averages, but it's just one more piece of information. If you're interested in seeing anything like that, just make a comment below. Let me know what you're interested in, because I'm kind of having fun building this this new way of tracking my trades. But anyway, that's it for today. Thanks for tuning in to this recap. Hope you found this video helpful. Don't forget to hit the like and subscribe buttons. I would appreciate that. So tomorrow morning, before the opening bell, last day of this week, I'll have new levels on the board and we'll do this all over again. Thank you, and have a great rest of your day.